There is a potential that CEI may be approaching some type of floor, but I'm not quite sure. Let's just go ahead and validate all of this together. What is up, you guys? Thank you so much for stopping by once again on this very windy Sunday. This is ARCa coming at you with a CEI technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's go ahead and dive right into the charts. Okay, so been a while since we actually looked at the CEI monthly chart here, and this is the macro perspective. Okay, so on this macro perspective, we actually notice that we have been riding a massive falling wedge. Okay, so falling wedges are usually a bullish formation, but please know that when we're looking at things on the macro perspective here on the 1 month, it's gonna take some time, as every single candle you're looking at here takes about a month for it to close. Okay, so very interesting thing here is that we have printed our first we're in the process of printing our very first indecision doji here. Okay, so that doji is it's called a spinning top doji, and that usually signals that there's the potential of a tie between the bears and the bulls, which is very interesting since it is within the support range that I've been talking about for quite some time. Okay, now why this support range though? So let's just go ahead and take a look at this, because this was a buy formation here, and this is essentially a very long standing. I'm talking about, let's see, how long was this? From 2019, December 2nd to just about July 1st, 2022, we were riding a right-angled broadening ascending wedge. Okay, so this wedge is usually a bearish formation, and it does have a price objective for us to take a look at. We take a trend line from the top side of the triangle, and of the formation itself to the very lowest point, and then we apply it to the area of breakout. In this case, it was this indecision doji. Okay, so that was on, let's see, January 1st, 2022 again. We apply it to that bottom side from that trend line, and it suggests a downside or a low target of about $1.61, of which we already touched. Okay, so you can see right here that $1.67 was that essential lowest target that we touched. Okay, very interesting that we would go right to that target, just a couple cents away from it. Very interesting here. Another, this is very speculative. It has nothing to do with confirmations or anything, but I just thought I'd point it out. The indecision candle that we printed here on July 2022 is very interesting, because this is essentially how the formation started, to continue that downside, and it looks like we're printing a very similar spinning top doji as well at the bottom, which could essentially send us back up. I just thought it was interesting as it opens and closes like that. Okay, no particular reason. I'm just kind of like speculating here and showing you guys interesting things about the chart, because I'm just crazy like that, and I tend to look at very tiny nuances. All right. Anyway, so the bottom end of the chart here, of the support line that I had, was in respects to the bottom support of the falling wedge itself. Okay, so I just thought that maybe we should keep that in mind and see if the potential is there, because it also rhymes with the 1.272 target of about $1.31 in the inverse fib that we actually took from the from this month swing low to swing high. Okay, so that actually gave us the targets that we've been looking at thus far. Okay, very interesting stuff. And also the fact that the $1.67 came very close to that 2.272, which is usually kind of something that happens, right? We would tend to cover just before the actual target itself and then make our retracement. But before we say anything about retracements and reversals, we must validate that direction for the movement first. Okay, you guys, so let's go ahead and now move on to the next chart and see what we have. Okay, so this is volatility that you're looking at, represented by this indicator BBWP. And the reason why I'm mentioning this is because when you pair volatility with momentum, you tend to get a pretty good understanding of how we're behaving and where we're going. Okay, so the behavior meaning that volatility is it's almost at a standstill. So meaning that volume, oh yeah, looking at volume here, it looks like volume is actually down to a minimum and we're not moving so much other than just potential consolidation. So the asset could be pensive about something, or the overall sentiment could be waiting for something to happen fundamentally. I'm not sure. I don't practice fundamentals. I only practice mathematics and raw price action, right? So in this case, we are essentially still in a contraction phase towards the downside, but again, we're like kind of flatlining here, suggesting just a standstill of volatility. Okay, so now momentum is actually starting to kind of represent that slow moving of or the slowing down of sell pressure, and I'm saying that because there are two moving average components here, and that would be the 14-day simple moving average and a 3-day simple moving average, and they are known as the K percent average and the D percent average of stochastic momentum. I have back tested this indicator several times throughout history and throughout so many tickers actually, and I'm getting a read of about 75 to 91% in accuracy of guessing the asset's direction. Okay, so it's not perfect, but it's very good to consider for our probabilities, right? So let's go ahead and now move on to the next chart. But still, remember that this is still pitched to the downside. It looks like it's slowing down, and the reason why we can tell that it's slowing down is because the shorter moving average, the 3 period, is now showing that weakness of the bears. Okay, so let's go ahead and now move on to the next chart. So this is the divergence chart. Divergence is the opposition of price action versus momentum, and in this case, momentum represented by the relative strength index RSI indicator. Okay, you guys, so we are noticing here that we had 1, 2, 3 drives of phantom hidden bearish divergence, which is actually something that happens when momentum is making a series of higher highs, and momentum being this, remember, and price action making a series of lower highs. Okay, so this is essentially what happened. It's still in play, but again, even in the price action on the 12-hour, we can actually see this curvature starting to consolidate now and just showing us that we are potentially, or the bears are potentially losing that strength. Another indication of that is that we are now starting to kind of meet that sideways trading of both the 14-day simple moving average represented by that pink line and the RSI signal purple line. Okay, so what this means is that we are in the RSI signal is in the gravitational zone, meaning it can pressure us down, and the 14-day simple moving average is in the opposition gravitational zone as well, which can pressure us up. So with this type of price action, we could essentially be stuck here for a while until whatever has to be resolved gets resolved, and it would essentially be doing some type of movement like this. So slight downside continuation meets that 14-day simple alongside the gravitational zone. We get that bounce right back in. We face the resistance from the opposition gravitational zone. Then we literally get pulled right back into the next area. The 14-day simple moving average again alongside the gravitational zone, and so on and forth. Okay, so this is essentially what I'm looking at. Okay, you guys, maybe, but we just got to know that there are things to be resolved here, and I can kind of see it, you know, on the behavior of the asset. So let's go ahead and now open up the last part of the analysis, which would essentially be the multi-pane, where we start to look at several time frames of momentum. Okay, so let's go ahead and start it off with the 30-minute immediate short term, just like we always do. And let's just go ahead and start that off now. Okay, so yeah, we're looking at just sideways trading, consolidation, and you can see we've been doing it for quite some time. Okay, so still suggesting massive sideways. We can't gauge any type of bias here, as we are literally in the middle of the bear weakness percentile and away from the gravitational zones on the outsides and insides. So there's no danger to the upside or downside here. It's ridiculous. All right, so let's go ahead and look at the bi-hourly. The bi-hourly looks like it's already starting to lose that sell pressure as well. Nonetheless, it's still a downside pivot, and the 14-day is still pivoted towards the downside, favoring the bears a little bit. But again, notice how the pivot from the RSI changed from aggressive to less aggressive, now starting to reflect that sideways trading that we are looking at, which is also very much in accordance to what's happening with the indecision monthly candle that we are about to print in 2 days and 7 hours. Okay, so if we do print this monthly iteration here, and we absolutely close, above the last monthly iteration, which is here are the values of the candles. We just hover over the candle and you're looking for the C, okay, for close. So if we close above $2.02, this would essentially potentially, right, reverse or have an upside of sorts. And let's go ahead and now move on with the next one. So this is the 8-hour time frame making an important cross here. Okay, so the cross is particular to the RSI signal moving below the 14-day simple moving average and suggesting a continuation of that downside. Definitely very weak downside, just like we've been talking about for that consolidation period. This is sell pressure here. Okay, but it still has some weakness there on the bears. Now the 12-hour is starting to show us that we're about to start this was the consolidation period that we were looking at, sideways trading, right? So let's go ahead and now move on to the 3-day chart and see what we have. Even the buy daily, let's see. Sideways trading, man, sideways on the daily, sideways on the buy daily, and the 3-day is showing us that there is some potential weakness here, which means that there could be an upside soon, potentially to the top side of this resistance range at about $2.17, and after, in the 3-day RSI suggesting we could actually pull back to test our current highs right now, which are about $1.96 before a continuation to that upside. Okay, so and now the 5-day time frame, it would be the last one that we're going to look at here, and it is showing a downside as well, but please start to notice how the 14-day simple moving average is starting to kink and losing that sell pressure alongside the signal line not being as aggressive as it was before. Okay, so at best case scenario, slightly bearish, mostly sideways trading for days to come, actually, until the asset has to resolve whatever it needs to resolve. Okay, you guys, so I hope that this brings some type of clarity for CEI. Know that I am not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay, I need you to do your due diligence and everything will be just fine. Okay, you guys, please refer to the links below. You'll find Twitter and Discord there, and also you will find the TradingView affiliate link there as well if you want to go ahead and chart alongside me with these daily videos that we put out. It would actually help my trading career greatly if you did sign up with the affiliate link. Okay, you guys, with that said, I wish you well, a very good day and the rest of your weekend, and I will catch you at the bell on Monday. Adios.